What do you make of, let's just say, what do you make of this week in trading, taking Christmas Eve and the 1,000-point move and the big reversal today?
Well, everyone was kind of hoping for the Santa Claus rally, but the rally hasn't happened yet. But I think we've hit the bottom of the market as the fundamentals are completely dislocated from what's happening in the markets. I suspect, though, that this will continue and be the pattern going into January.
So, Jeff, you are now the second guest that we've had in just the last 45 minutes telling us that the bottom is in here for the market. We all know the fundamental story about the economy, about earnings. So we have a lot of stocks now, a lot of sectors that are down 20, 30, 40% from their highs. Are there any things that you like here?
Well, I definitely like tech. I think tech has been beaten up pretty badly. Even though we think corporate earnings have peaked in October, I still see the FANG stocks doing well for 2019, even though there are some major overhangs, though, in various parts of the stock market itself. That would be my play right now, techs and in the bank sector as well.
Jeff, in terms of just watching these swings, as we said, yesterday was a record swing for the Dow. Today we saw, a huge upswell towards the end of this trading session. I mean, in terms of the volatility we've seen moving forward, are you expecting that to continue over the Santa Claus rally, as you mentioned, or is that just something that's going to continue on, as we've seen and talked about these investor notes, noting that the Fed isn't going anywhere, the trade deals with China isn't going anywhere. We haven't really resolved any of those question marks so far.
Well, we haven't, and those are part of the overhangs of what's causing this volatility, combined with the fact that we're coming to the end of the debt cycle. The Fed is kind of fickle, even though they're going to raise rates 2 or 3 more times this year. We've got the China trade tensions, but we do have some great underlying conditions in the economy. So we have this confliction of events going on with an overbought market. And when we have political instability, these are the kinds of things that happen at the end of a long-term 10-year bull market run.
So I guess, what do you like here if you feel like we are at the bottom? Jeff Gundlach was talking recently about sort of a mania in passive investing and in index funds. Is it safe to buy everything, or do you have to be really particular here in terms of what you pick?
Well, I think that's a loaded question. We could do a whole show on that. But when investors get hurt here is when, we've had almost a 20% drop. Prior to this week's action, we were down 19.8% from the October highs. And this is where investors really get hurt, is when they get emotional and they get out. And now you see, look what happened today. The market got hammered earlier, and it really came back hard and strong. The buyers came back after they saw the bleeding was going to stop. And I suspect we're going to have more of that action going forward. And so investors shouldn't be emotional here. If 20% is their downside protection in terms of, when they pull the plug and get out, I think now the next couple of months we're going to see the market go sideways and not see the correction go further to the south side of the equation unless we have poor economic data going forward in the first quarter.
Jeffrey Small, thank you so much for joining us. Arbor Financial and the author of Turning Financial Planning Right Side Up. And Zach Guzman, thank you for joining us.
Yeah, thank you. Sat in the chair and it went green. Not going to say it was me, but great to watch it with you guys.
Not wrong.
Either you or Santa Claus. We can't figure it out. We're going to be back right after this.